Welcome to the Corporate Treasury 101 podcast. This is the first part of our interview with Craig Jeffery from Strategic Treasurer, where we first focus on the payment landscape in the United States of America. Craig founded Strategic Treasurer in 2004 and is the managing partner of the firm. He also is a publisher for CTMfile, a Treasury News Company. Strategic Treasurer does extensive advisory work and global research in the field of Treasury. And last but not least, Craig hosts the Treasury Update podcast and the Open Treasury podcast. He is a fellow podcaster, and therefore you will of course find the links to the two podcasts in the description, but you can also find them on your favorite podcast app. In the episode of today, expect to learn what are the type of payments that we can find in the United States. What do we mean with payment rails? What are the specificities of the US when it comes to payments? For instance, what are SEHs, wires, and much more. Craig is impressive, to say the least. His knowledge around payment is something, and he's quite used to the podcast format with his own podcast. So we enjoyed the conversation a lot with Sam, and we hope you will enjoy it as well. If that is the case, why not leaving us a review on your favorite podcast app? It helps us a lot, allow us to interview more and more amazing people like Craig, and makes Sam and I very happy indeed. With all that being said, please welcome Craig Jeffery.
So, Craig, Guillaume's taken us through in the past this whole payments journey where we've talked about checks, cash, debit cards, these kind of all these different mechanisms of making payments and the pros and cons of each. But we haven't really gone too much into the specifics of what kind of payments you would find in the US. So could you take us through overall what kind of payments you find in the US and maybe what's unique about it?
Sure. Yeah. So when I think about payments, I break them out to the, what individuals use, or the business to consumer or consumer to consumer. But also most of our work in the consulting world is with to business payments. Most of those are business oriented payments. So when we look at, checks are still a big issue. I know, parts of the world look and say, US is such a high tech country. Why do you still have checks? Well, those are items that start off as paper. They never make their way physically to the originating bank in a paper form, but checks are a big one. Then we have different types of low value payments. These tend to be like card payments, ACH, which is an electronic fund transfer. Starts off as a digital transfer. And then as we look at high value transfer, there's several types of wire types of payments. On the consumer side, we have different services like PayPal, like Zelle. There's a huge number of payment methods we can transfer money between family members or friends. If you go out to a meal and someone pays for it, you can just zip the money instantaneously. And so those are really common. So are the different wallets that are usually and typically stored on your phones. But from a corporate standpoint, it's mostly check, card, low value and high value payments. And there's a range of offerings of those services within that setup. Different types of card payments, purchasing card, virtual cards, ghost cards. On the faster payment side, or the more rapid payment side, we have different types of ACH. We have what's called real-time payments and FedNow, just faster payment schemes. And just quicker payment schemes maybe is the better term that doesn't infringe on certain naming conventions.
So those are a lot of terms. Awesome. Thanks a lot, Craig. I would like to dig a little bit into some of the things you mentioned. First of all, to begin with, so we had a whole series of episodes actually on checks. Why do people keep using them in the US then, if they are even dematerialized at certain points in like the payment scheme? Because once you deposit your check at the bank will not send the check physically to the other bank to clear it and so on. It will more be done digitally. So why do people keep on using them?
I hear the jealousy in your voice, just because
that's spot on.
Well, it's I used to be really embarrassed. Now I'm just sort of embarrassed, but it is moving. We're in an era of less and less checks every year, and they do get dematerialized. Back in 2001, there was this huge push because checks you would write them and they would be deposited at the pays bank, and they would move physically move paper all the way to their bank. And if you're old enough, like I am, you used to get the physical checks back in an envelope at the end of the month. Like paper sent all over the country would find its way back to you, which is amazing. That's where I comment about the jealousy. Like, who can handle paper like that in the volumes? Well, somewhere right around the turn of the century, it changed, and check 21 and image presentment is like, once it goes, as soon as someone gets it in a lockbox, at a bank, or they receive it, they snap a picture with their phone and it converts it to an image. And the image is what travels all the way through. It converts it to digital information and settles. So it dematerializes it as quickly as possible. Why is it done that way? We got really efficient at moving paper around. And if you saw how that stuff was processed, you'd say, if you look at a lockbox, you say, wow, that's really fast. The paper is about to burst into flames, how quickly they move it on machines. But that's the limitation of how much you use paper. Paper is terrible. Some people like it because every system was set up to issue it. It's simple. One of the nice things was, once we hit COVID, that was one of the nice benefits of COVID, was that people are like, oh, nobody wants to print checks or stick them in the mail. Nobody can receive them. And so there was a big push towards electronic. Those things have helped. So we are in an era of less checks. I don't know why we still use them. If my kids ever have to write a check, they're like, why do I have to write a check? Dad, can you write a check? And I have to find my checkbook because I don't write checks. But it's diminishing, but it's just what we've done, I guess, and it's disappearing.
Fair. It's embedded in the culture and the usages. But okay, there is a shift towards more electronic way of making payments. Another term you mentioned was low value payments. And quickly after, you mentioned high value payment. Can you just quickly explain us what are those and the difference between the two?
Yeah. So, it depends on, what country or even sometimes what region, how you define those. And so, I find the description of low value payments and high value payments more common globally than wire and EFT. In the US, we have a wire transfer system. These are high value payments or real-time gross settlement systems. So high value payments are, they're always revocable. They usually settle through a central bank system. They're usually large sums, lower volume, but high value. And so depending on what country you're in and what payment system you're used to, they're higher value. Low value payments, in the US, people think of direct deposit. When you get paid, it's a lower value payment. If you have, your accounts debited for utilities, those are low value payments. Those are primarily automated clearinghouse payments, or ACH, in the US. And so those are low value payments. So part of our consulting practice, we help companies implement and connect. And do you need high value or low value? How timely does it have to be? What's the size? What's the requirements for revocability? Those are probably the biggest deciding factors between high value and low value.
Okay. So there is low value and it will be treated in a certain amount of time, and high value will be like bigger amounts treated.
Urgent payments. Again, SWIFT, they call them urgent payments.
Oh, okay.
And then non-urgent payments is like, depending on which scheme you come from. If you're like, SWIFT, it's urgent, non-urgent. If you look at different banking systems, it's high value, low value. If you're in the US, it's, wire and ACH typically.
Awesome.
So there's not like a dollar value drawing the line between those two? It's really just like the type of payment?
Correct. There are limits on the lower value payment systems, depending on which one it is. So there are some limitations. So if you wanted to send $500 million US, you can't use a single ACH to do it, because the limit is 1 cent below $100 million. And it's really driven by how many fields exist in the record. So you can send $99,999,999.99 via an ACH. If you want to send more than that, you have to send 2 ACHs. because the field size only contains that much, whereas wires, you can do more. Some of the other lower value payments have limits like $1 million, $500,000.
Yeah, I hope no one's utilities bill is that high. So next.
It better not be, right?
Nowadays. So bringing that to corporate treasury then, Craig, what are the pros and cons of those, and which ones would corporate treasurers in a corporate fashion more move towards and be relevant to them?
Yeah, historically it's been heavily ACH and wire. So wire is we need irrevocability. Once we send it, we want to make sure it's good funds on the other side. There's no way to pull it back through the payment system. You'd have to use the legal system if there was some type of error or some type of issue. You're doing a closing on, real estate, or you're buying a business. Everyone wants a irrevocable type transfer. More expensive, a little faster. If the lawyers are sitting in a room, you want that to go quickly. But it's definitely more affordable, less costly for the transaction if you use something like an ACH. So those are the two big ones for using traditional payment rails. Now there's a lot of card use. There's some newer payment rails as well that are having a significant influence, but the biggest ones are ACH, wire, and certain types of card, like purchasing card or virtual card, to handle some of the AP activity.
Could you define what ACH is for the non-experienced treasurer? What does that stand for?
Well, it stands for Automated Clearinghouse. And maybe a little bit of background. So the U.S. central bank is the Fed. I think most people hear the Fed is that's, you may not know every single country's central bank, but the Fed is a behemoth in what it does. And so central banks oftentimes act as clearing for payments. And, the National Automated Clearinghouse Association, or the ACH network, the Automated Clearinghouse Network, handles these low value payments. So it's, automated clearinghouse, a clearinghouse so that, it's a hub. You send payments in there as a bank and they send payments out. There's a body of rules, called, the NACHA rules, and there's the ACH network that handles the movement of value transfer. Those settle to the different accounts on the other side.
I'm super interested into digging into what ACH is, but you also mentioned wire, real-time payment. So those are instruments that I would like to break down. But before this, and maybe staying a little bit high level, there is a term that I keep on hearing, which is payment rails. Can you break it down and explain us what it is?
It's a visual image, a material image of a digital transaction, right? So rails that you have trains run on. So how do you settle a wire payment? Well, maybe you're using the Fed wire system, or you're using chips. How do you settle a low value payment like ACH? You use the clearinghouse rail. How do you settle your cards? Well, you use the card network. It's a card network rail. So it's just maybe a more common or vernacular type term that lets you say, oh, here's the channel we're using to pass these on, or the rail. It's a hipster thing. Use it and you'll be hip.
Okay, so to make the link with an episode where we broke down card payments and card payment networks, this will be one rail. The one you just explained, the automated clearinghouse, will be another one. Yes. This is what allows the payment to be settled, so the transaction to be effectively happening with the transfer of the money arriving on the account of the beneficiary. That would be the payment trail.
Yes.
And to go back to the US then, what are the most popular payment trails in the US? And since you mentioned both, for like the individuals, as an individual, what do I use most commonly, or what is my bank using to process my transactions? And then from a corporate treasury standpoint, what are the payment trails that we would then prefer?
Well, on the individual standpoint, probably depends on your age cohort, but the card network, the ACH rail, those are really popular ones. When I'm paying people personally, it's Zelle, PayPal.
What's the other payment trail, the rival of PayPal?
One of them is Venmo. There's a huge number of different payment applications, but Venmo, Zelle and, using PayPal. So individual transfers, those are ones people use. Venmo and Zelle are really, really popular. Zelle is associated with your banking information. So money comes in and out of your bank account. The bank sponsors the activity. And so it's easy to use and see. When you use other ones like Venmo, there's a separate, store of value. You store money with Venmo, for example. So there's just a couple different methods. Or Venmo has long been very popular. Zelle has grown extraordinarily fast, and I believe it's overtaken Venmo on the consumer side. But that's certainly not an area of expertise of mine. But bank support's proved invaluable for their activities.
Okay, so that would be for the individuals, along with the MasterCard, Visa. I would suppose in the US, American Express as well. If we look more on the corporate treasury side, what are the preferred payment rails usage?
The biggest ones are ACH is the most common. Besides checks, checks are still a dominant force even on the corporate side. They're diminishing, and ACH wire transfers are still popular for large payments, but they're very low volume. Certain types of card transactions, like virtual cards, purchasing cards, specialized cards that attack a whole section of the economy are big ones. The use of some other payments like, RTP and same-day ACH are used. They're more specific. Some insurance companies focus on them, or when people need to pay payroll very quickly, they'll use same-day ACH or RTP, in increasing measure, but those are still very small by volume and values standard today.
So these payments that you mentioned earlier, the high value payments, they will be urgent versus non-urgent, but you can have an urgent payment that is very low value as well, right? And in terms of amount, like I don't know, payroll, for instance, for a small company, I still want it to be delivered on the very same day to my employees. I will use an urgent payment or a high value one, even if the amount is low. Or am I mixing up stuff here?
That would be mixing a few things. So if we're using the term urgent, well, at least how I'm thinking of it. So if we're using the term urgent payments and non-urgent payments, I'm going to be thinking of the SWIFT definitions. When you send messages there, I'm going to think, okay, it's urgent or non-urgent, because SWIFT has to take messages for everything that eventually their payment instructions, the actual settlement, whatever the rail is going to be urgent or non-urgent. Like in the US, it'll be wire or ACH, for example. So if you need to pay someone payroll today and you were really late, you might use a wire, but you might use the same day ACH or a real-time payment, for example.
Makes a lot of sense. Okay, and to wrap up on this corporate treasury aspects, no usage of blockchain payments so far in the US that you have seen, or is it a technology that is not yet there?
Well, there are a few supply chain vendors that use activity related to blockchain, but this is not an adopted method of using blockchain for settlement.
Is there a specific limitation on blockchain? It was all the buzz for such a long time. It was going to revolutionize payments and it was going to eliminate counterparty risk and whatnot. What do you see as like the limiting factor of blockchain and why it hasn't taken over by storm as it was meant to?
Well, I think the a lot of the focus and attention has been on some of these newer payment rails, faster payment rails that tend to be lower value. And so, but still, if you look at same day ACH, you can send $1 million. RTP, their limits increased also to about $1 million. So there's some, like RTP is a new payment rail. Same day ACH is using an old payment rail that you send it in the same format. You just have a different settlement date. And so instead of batch overnight for regular ACH, it was a batch system, like all the payments go, you send it today, it settles tomorrow. They just process it in batch, a very efficient method of processing. And then the settlement occurs the next day. And so they've retooled that network to say, now there was 2, then 3, and 4 windows where you can send it And there's just faster windows where it can make those funds available, on the same day. So basically like 4 overnights, if you will. And so there's some rules for that make it work. So there's been a lot of focus and growth in there. Banks and corporations are spending more time in there. On the blockchain side, for having this idea of there's a distributed ledger where you can track items. That's really great for documentary collections or information. Like, I'm trading, I want to make sure everyone has the right information, a network view of things. That's where those things will grow and be handled more effectively. So taking steps in those directions, and corporations are looking at them. I would say it's still early days, really early days for that. So it's not like there's hatred of it or people are against it, but it's, both parties have to be developed in those areas. I think there's a lot of value in, the concept of this distributed ledger, as opposed to having, you always have to go to banks to do this. And it's based on paper processes. Now it's based digitally that we can manage it. So it takes a while to change this, change the tech that we use to replace older, historical, slower methods with better, newer methods, right?
The only corporate treasury area that I can think of that is starting to use blockchain, or at least where we see a very useful usage, is trade finance. As you mentioned, it's for very much like documentary purposes, and there it makes a lot of sense. But we have yet to find a guest to talk to us about this.